US research firm Swiss Re Institute indicates that the insurance sector in India is expected to see the highest growth rate among G20 nations. Its projections indicate an average increase in insurance premiums of 7.1% from 2024 to 2028. This growth far surpasses the global average of 2.4% for the same period. Life insurance premiums are expected to grow by 6.7% between 2024 to 2028. The non-life is estimated to witness an 8.3% growth. On the other hand, health insurance premiums are expected to increase by 9.7% during the period. The industry is optimistic to grow on the back of a burgeoning economy, an expanding middle class, and increasing adoption of Insurtech. Insurtech encompasses technological innovations aimed at enhancing efficiency and reducing costs within the insurance industry. Despite the positive impetus, the overall insurance penetration in India as of FY24 is expected to be only 3.8% in India compared to 6.5% globally. In developed economies like the US and Canada, this number is over 11%. On the other hand, penetration for life insurance in India for FY24 is projected to be at 2.9% and for non-life at 1%. Despite rapid growth, India faces a substantial urban-rural penetration gap. With over 65% of the population residing in rural areas, less than 10% have life insurance and less than 20% have health coverage. Rahul Meena Mishra of Insurtech startup Policy Insure explains why insurance penetration remained a challenge in India.
There are 2-3 things which still is a major issue and bottleneck for the insurance industry. One is the lack of awareness. 70% of population lives in tier 2, tier 3 towns and rural. They are not aware what is insurance is all about, why insurance should be taken, what is the benefits of insurance. And secondly, it is a problem of the industry is the policy wordings. Policy wordings are very complex documents, like extend to 5-7 pages. A common mind like you and me, it's very for us, especially for people like us also, it's tough to understand each and every wording, which creates lack of trust. Even if the person buys, there is still lack of trust in the back of our mind, whether he will get his claim or not. Claim settlement process is also complex in nature. Although a lot of cashless things are happening, especially in auto insurance, and to an extent health insurance, but still there is in back of mind, subconsciously people feel, why should I take insurance? I will not get a claim.
Insurtech is one of the potential drivers of increasing insurance penetration in India. Startups in the sector are also seeing continued interest from investors. According to a report, between 2018 and 2022, Indian Insurtech startups raised $2.6 billion. 90% of this funding has gone into B2C Insurtech players. Echo, Insurance Dekho, and Turtle Mint have received multiple rounds of funding from investors in recent years. While interest is brewing in Insurtech, industry observers say the sector needs more innovation to improve the overall life cycle of products. Animesh Das of Echo answers if Insurtechs can improve insurance penetration in India.
When we say Insurtech, I think we need to understand that it's not just the distribution part of it, or you're not just digitizing the existing methods or existing traditional setup. You have to solve end-to-end, which means distribution, the customer experience, the way operations have to be elevated. All those things should be part of the Insurtech. You have to solve customer life cycle, starting from their acquisition or even the brand positioning. You have to come out to be a brand which is very strong, which is very exciting, which is genuinely understanding their problem statement, solving it properly, till the life cycle of a user where you are giving them claims, renewing them, figuring out how they keep sticky to you, right? And can they buy more products from you, right? And find you exciting, right? So all these aspects have to come together and not just the digitization part of it.
Apart from Insurtech platforms, a lot depends on the point of sale person or the POSP model. This physical distribution model was introduced by the Insurance Regulatory Development Authority of India in 2015 and has recruited over 1.4 million agents since its inception. Experts believe that a combination of digital and physical selling augurs best for the industry.
It has to be a combination of both technology and the physical presence on the ground. Technology brings in transparency. Person on the ground in tier 2 brings in the trust. So this transparency plus trust will help in increasing the insurance penetration. For example, a person living in remote town of Bihar or Uttar Pradesh will trust the local person. He will be having the face, but if the local person is equipped with his handheld technology application for sale and after sale service, then is the ideal scenario when sales will also happen, after sales service will also happen. There will be trust and insurance awareness will also increase.
In conclusion, while Insurtechs hold promise for improving insurance penetration in India, the sector continues to grapple with allegations of mis-selling and subpar customer experience. To achieve greater penetration, addressing its inherent transparency issues and building trust in point-of-sale persons are imperative steps for the industry.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
She's working her way to the corner office. Business Standard.